The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good weekend. Remember, next Monday off. Charged up about that, Memorial Day. But we got to follow through this week, do our 5 days, and then we're free. Let's take a look at the 10-year really quick. As we look at the 10-year, you know, we talked about this FOMC situation, I would call it. And, you know, this high or low actually relative to where we're at about a month ago, even after the rhetoric, so-called rhetoric, changed a little bit. And told you to kind of keep an eye on this, that the world of treasuries wasn't going to heck in a handbasket here. That's seemingly kind of starting to follow through here. So what does that mean? Actually, we've got a new support area down here below, a new inflection point, unfor high and for low, balanced area, if you will, that we're going to be focusing on the daily, which is going to be probably within the weekly profile. So you're going to have some decent support here. I still think the line in the sand on this particular product is that 129 general area. Remember, we haven't broken stride here on the way up, and it's a little concerning. You know, if you're a long market player, long equities player, you got to be wondering, you know, what in the world is it going to take for these guys to raise rates? What do they know? They generally know less than we know, but man, just astounding. They're, you know, some guys are predicting by the end of the year, the S&Ps are going to be 2350. That may be the case, but I mean, if that's the case, you know, the rates really need to stay at zero. So go figure. They are what they are. Don't try to outthink these markets. Don't try to outthink the treasuries, by the way, in particular. Going to take a look at crude oil. We switched to the July contract. We had a new profile appear on Friday, and here's the July contract that I'm for high right around 49. So where's support on this now? You see where it has been around this 47.20, 47.13, 47.20. And as we look at this, you know, we got a POC, not a big wide profile, nothing to really write home about. But I think easily this could explore down into 46.01 now. So that's kind of the explore the entire full fair auction, what's currently in force. And then I think you could be looking at a possible support area. But I personally think the long days of crude might be topping out here. So again, you know, you've got a chance to play a balanced area down into 46.01. I wouldn't go long right here. You've got nothing to lean on whatsoever. You might as well sit on your hands and just wait till stronger inflection points are approached. And that would be 46.01 in crude. I actually think you could short this on a contra trade right now with stops above 48.97. But, you know, we kind of drifted about a full point lower off of that right now. And if you're not in that trade already, your risk reward scenario is not exactly as good as it needs to be with targets at 46. Gold, man. Well, there's no major endangerment of the long term. I'm showing the gold on the weekly right now. And if you go into the scanner and you look at gold, where's it at? There it is. You'll see, you know, if you just look at the cell structure, you'll see 17. We've been 17 weeks straight in a row above the weekly unfair highs. That support area is well down below. We'd probably have a new weekly profile attempt to appear if we started diving hard and that 1143 wouldn't be as important. But what you'll notice here is this 38 and arrow up, even though we're within the balanced area here, down into 1238. We're between 1253, 1238. That arrow up means the trend continuation is still in place. We're just looking to still buy support and buy breakouts. And as we look at the weekly, and then we kind of traverse into the daily, here's that sell structure explained really via a chart. You can get this chart in the scanner. So again, we've talked about 1238, 1243, kind of the, the collection area down here, a little bit more support on the bottom of this profile. And right now, I don't like how this thing kind of drifted back below 1253, 1254 on Friday, and then we're just kind of hanging around down here. Unfortunately, gold usually moves severely the wrong way before it moves the right way. So be prepared that we could have more of a pullback in this, and you probably got a little bit lower price like we talked about the other day. We had a little bit of a trading opportunity around 1253. I think Tom and I were talking about it around 1247. Just took a shot down here in the collection area, but you don't want to see these things kind of hang around and consolidate. That usually means they're going to make another move down, and the massive pickup area is around 1238 on this. All right, I see Joe from Scotland finally got up. Hello, Joe. Just kidding. I read an article just to let you know what goes through my mind when I read articles. Apple was Tim Cook had done a 4-day visit in India and felt great about Apple putting a development facility there. I think they're just trying to get the heck out of China. There's so many, my experience in China, I think I can freely say this, as I was giving a speech in front of about 400 people at a Bloomberg event in Shanghai. And the guy basically stood up in the audience, one of the people who was there, and he said, well, why? I need the formula for all your indicators. I need them. And, it's all about replication there. I mean, so, NDAs and proprietary knowledge really seem, and I got into an argument with the guy in front of a big crowd of people, and Bloomberg actually kind of told me I couldn't do that anymore. But it was disturbing and rude, to say the least, to me, or in my opinion. So I told him he had to give me $10 million, and there's a lot of other rhetoric that happened there. But Apple getting away from China, I don't blame them. But they're kind of jumping out of the pot into the fire. If you guys have ever tried to do any business in India, it is a tough place. Everybody nods their head and says yes, generally speaking. And yeah, it's a tough place. So I'll tell you some more stories when we come back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And I didn't really tell the whole story about the guy at the Bloomberg event, but he was kind of a young guy. Raised his hand, stepped up, demanded the formulas for everything I was talking about. And I just kind of jokingly told him, how's 10 million sound? So shame is a big thing over there. So he was shamed. People were kind of laughing, and the guy ran out of it was kind of an ordeal, and was different for Bloomberg. But talking about India, man, I've been to Mumbai once, and I will never go back. It's not my cup of tea. There's a sea of people over there, and it's maddening. And good luck to Apple. It's they might learn some things first, though. It's a learning experience when you try to do business overseas. Get sucked in. All right. So let's take a look at, we talked about crude, gold. We want to look at talked about the notes. And, the S&Ps, this is the deal here. We've got a kind of an outside profile here, but not a big one. And that's today's, we had this yellow bar happening Friday. Usually means a new balance theory coming out. So you've got a new unfair low around 2033. That's very close to this, kind of POC on a pretty thin profile in our long-term weekly. I'm sure I'm confusing everybody now. But in my opinion, you've got to take a look now at, where are the internals? The market's kind of contracting in volatility. Steve Banger was actually speaking about that the other day when he was on the show. And I'm not opposed to what he was alluding to. So I was just doing a little sort there. Let me get this out of the way. So, even though we got kind of positive on the breadth on the short terms, we still got a little bit of a mixed bag, and we're down a couple S&Ps this morning, I believe. Yes, Mr. John from Philadelphia, I will slow down. I have a bad tendency of moving the mouse around like that. I know that's irritating. I will try to stop. That's another yes. I will honor your request. So A little bit of a mixed bag, not really big on the long-term breadth, and we won't have a lot of conversion over this morning. A lot of these stocks won't be changing their tone too much. So as you look at this and you look at the daily, we really don't have a lot of direction right now. I'll just tell you the best case scenario would be to really, and this is our weekly. Let me just go back to our daily. The best case scenario would really be to turn either one of these two scenarios would be to turn breadth positive and get clean and clear at least of 2073, 2068, this general area. And the price action on the index would obviously be above there, and breadth will be turning positive on both the weekly and daily. But I'm a little bit more inclined to thinking that we're going to bust through 2033, 2028. Breaths are going to roll over a little bit, and we are going to have a little bit of a ride down here. I know rates are low. The market seemingly likes that, but I still think this 2006 is in order to complete the long-term fair auction down. Doesn't have to happen today. But again, getting some momentum on the short term. On the short term, you've got some opportunities here, and these are all within the scanner. I had a bid in at 2043.5 last night, or this morning, and it hit, and I didn't get filled, and it really disturbed me. I was doing some short-term stuff, but getting back down below 2043 is going to be a cool situation. And why is that the case? Because you had 2043 unfair highs on the 240 unfair highs, and then you got this previous remembered to 2043 25 area right here. So I think we're going to drift down into the 2033 and even lower over time to 2006. Put a gun to my head. So that's kind of where I'm placing my bets right now, and starting to have some rallies in the 10-year. It looks like to me that we're going to have some new daily profiles like we talked about before, some new support here. And I think we could easily get back above, I know this might be hard to believe after the other day, but I think we could easily get back above 131. All right. So the question then is, Jay, would I be wrong to be into the long-term bullish on the XLU? I think the 10-year is not going to do a moonshot right now. But, I've always been a fan of trying to find support on the XLU. Pre-market looks like 48.32. Again, it doesn't seem terrifying whatsoever to try to buy these spike downs in the XLU ever. So when we have these big pullbacks and, you've got a collection area, I'm kind of playing around with this, legging into this position all the time. So it's not a like a short-term stop out day trading situation. I like to play this kind of in waves. I still think we can get back above 50 on the XLU, even though we found resistance up there. I like how this is holding in there relative to what the 10-year action's been. And, this may be a boring trade for a lot of you guys, but you can find in the scanner some instruments in the XLU. If you drill down into these things, let me go back to the XLU here, and there it is. You can find the strong of the strong here. I think we talked about NI a little bit. We've also talked, here's the weekly on NI. I love how this thing is acted. I mean, when the XLU pulls back, it's right around support. We've had the breakout. 2362. Again, these might be boring trades relative to the Netflixes and the Amazons and the Teslas of the world, but sometimes boring is good. Trust me on that one. I like this one too. NEE, Nextera. Let's see what else is here. CMP. See if we can get this to pop up here. Yeah, I mean, these are great examples of not wanting to pull back when the XLU pulls back and just sitting on the launching pad. So, you want to trade the XLU. A lot of times you can just go into the scanner, find the opportunities here. Let's just look at AEP. Yeah, not a lot of leverage there, but with some great trading opportunities before. Let's take a look at Excel Energy. No leverage there. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We were just kind of surfing through some of the XLU stocks. Not that many of them in this ETF actually. But again, that's kind of, when I want to try to increase the odds, I'm saying, okay, wow, the financials blow. I hate them. I personally hate some of the stocks in the financials. I'm just kidding. But if I want to, try to increase the odds, and I think the financials are due a bounce, for instance, or they're coming up into some kind of resistance. I want to find the things that won't even get out of bed to go up at all in that latter instance. And that way, if I drill into this and I can say, wow, let me see some opportunities possibly here. And one of the cool ones, let's just look down here. Don't see any bottoms here. Well, Goldman Sachs, that took a wicked little rally. Let me take a look at this. Yeah, I mean, this thing is not for the faint of heart, for sure. But you've had a daily close and a weekly close below 155, 154 and a half. That's pretty significantly. I mean, it's pretty significant, especially when the market's been. This is our weekly. Definitely been. If you just kind of look at this over time, there's no mystery here. It's been a relatively weak stock, and when you've got resistance on long term, you can sell, and breakouts you can sell. Generally speaking, this was a little irritating how this kind of rattled around here, but that was when the market was just lifting hard, back in late February into May. So is it a stock you can take advantage of? Yes. Would I rather play this with some type of option play? Probably, because this thing's kind of volatile and it can shake you out. Let's take a look at another stock in that particular group. JP Morgan. Okay. If we can get this to come up. On the other hand, this is a type of thing, that, you're coming down into support. The XLF, we're going to reference the XLF in a second and just look at the chart. But this is the type of scenario you have almost a polar opposite situation lately. And this is the type of one where you want to be buying support as opposed to selling resistance on the Goldman Sachses of the world. Now, these banks, they're not dumb folks. I mean, they will find a way to make money, especially Wells Fargo, by charging you extra fees. And when you catch them, they just basically say, oh, that was a mistake on our part. So you've got to always watch your account when you're dealing with Wells Fargo. But the XLF, I mean, JP Morgan is kind of outperforming this from just a pure stock chart action. But right now you've got 2358 resistance. I'm so happy to see a new profile here, and you've got 2204 down below. So those are kind of the range areas. I don't think this thing's going to kind of bust a gasket on the upside or the downside right now. But if you're looking for opportunities on the long side or the short side, you can actually find those in the scanner and the XLF. All right. And there's many more opportunities in each one of these ETFs. So the XLE, this has kind of kept the lid just by the action itself on crude. Here's the XLE, obviously crude making higher highs. And, a lot of these stocks are going, well, you know what? So what? So what if crude's kind of lifting a little bit higher here? We've got to regather ourselves because we just feel like, this might be the top of the heap from the underlying crude action. Looks like this morning we are printing 65.92. I really don't think this is going to hold here. The 65.27 support on the long term on the weekly. I think we can easily, as you can see, I mean, generally speaking, a lot of these fair auctions are explored, and I'm not saying the XLE is going to go straight down, but 60.83. Especially with crude, showing the hints, 46 may be in order on the July contract. The XLE could drift back here. So when you're looking to try to increase the odds here, you can find some internals going into the scanner. And let's go back to the XLE section. Still breath positive on the, well, barely. God, what is that? Yeah, really barely. Big balanced area on both of these weeklies and dailies. But going into the XLE, what's holding up? Apache. These are the stocks to hide in if you must be long. But I think you've got some short opportunities that may have been showing themselves recently. Rig. And what's the risk reward on that? Yeah. You don't have well, actually, let me do that for you. Let me pull it back up. Let me see where we're at pre-market. Okay. So 936 and the unfurloughed 825. So, 936 down into 825, what is that? 13% maybe? Somewhere around there. If you get that type of move and you're not averse to making 13% with some stops in order, above that 936 based on your appetite for risk, not a bad little trade there. A couple other weak stocks. Nothing to really play defense against there very well. Let's just look here. And obviously, you've got some long opportunities here that are glaringly in your face. We go back to SWN. I still love this little stock. Murphy Oil, let's take a look at that one. Here's the daily. Here's the weekly. Unfortunately, I feel crude oil is going to come back. This would be something, if I'm wrong, crude oil rallies. You've got a stock that's pulled back decently. And we're at the weekly unfair highs right now on Murphy Oil. Again, I'd rather see weak stocks to trade right now in crude than strong stocks. I think those are the ones that. And let me see what's happening here. CVX. Yeah, not good. Not the best one out there. Anadarko. Let's take a look at this one. Yeah. We're going to take a look at a couple more stocks, see if there's any opportunities in the XLA. When we come back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software
software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. And, I kind of caught myself drifting off into mumbling on the edge of the last segment. But what that really proves to me is, like we talked about at the beginning of the show, and Steve Banger, we were on last week talking about this, the market's kind of driving itself into some low volatility times. A lot of times you don't need to really be in the market all the time and trying to sling the swing trades around. And we talked about, at this stage, with volatility contracting, looking at that scenario and being able to look at possibly buying a strangle, like we talked about on beans with John from Philadelphia around 875, that general area. Look how that worked out. Volatility gets driven down. You don't really have a lot of edge. And that's kind of what I was coming to the conclusion, I guess, mumbling to myself while I goes, there's really not a lot of edge right now. Directional edge. We're mixed up. The breadth is mixed up. Volatility's down. Do yourself a favor, and at least in a demo account, put on one of those long strangles on the S&Ps right now, and just like we talked about last week, how do you adjust that position if it goes one way or the other? Play around with maybe selling some premium outside of that long strangle, turn it into one side of free trade, looking at the inflection points and the breadth on the index itself as it approaches these particular, outside envelopes on some of the numbers that we talked about earlier, being able to kind of scalp a little bit of a gamma situation off of it. Look that up if you want to know about all the different Greeks in the option arena. Scalping gamma is just a real easy, nice, just can be very riskless little trade. Look it up. But that will be kind of a version of that. You can do a lot of different things with the strangle once it starts, expanding and going your way and volatility increases. We had talked about, here's the dollar. We talked about the dollar having these targets up top after we crossed the 94, 12, 13 border. Next stop up, again, exploring the entire fair auction up into 95.65. Where did we reach a high of 95.31? So got in that neighborhood, backed off a little bit. The situation that this was obviously driven to some degree by, catching fire by Yellen, having a hint, never doing it, but having the concept and the idea that rates may be raised enormously, that quarter point raise that's going to break the back of the economy. Just the hint of that drove these higher. But this thing crowding around this unfair high, not wanting to really back off is a little concerning. Here's the daily. This is kind of long and strongish looking. So we may surpass that unfair high on the dollar. And what does that do for the market? I don't know if the market's generally going to like that, but again, you never know. The thing you do know is that volatility has just contracted. I've said that about 10 times on the show today. And, we will ultimately have an explosion in volatility. And it'd be nice to catch that by not paying up for the options. Put it that way. Let's take a look at the Shanghai really quick. Let me look at PCQ. I just saw that, RJP. Sorry about that. So here's the Shanghai. Nothing really to write home about this one. And I think we're actually going to do ultimately a flush below 27.42 on the Shanghai market's not going to like that either. Let's look at PCQ really quick. PIMCO municipal income. Okay. Jeez. RJP, if you want to call in and let's talk about this will be great. If you got access to call in. And the numbers are on the TFNN homepage, by the way. I'd love to get into this. Okay, here's the long term on this. Wow, that is amazing, because what that means is that in 1 week, this is a weekly chart on PCQ. See, and this is what we call our Vega indicator. It just kind of color codes, gives you these indications. Okay, RGP's not calling. Okay, so it gives you these indications when new profiles are attempting to appear. Is this in the scanner? Let me check PCQ. Okay, so let's go back to PCQ. It's not in the scanner. So what the chart is basically telling us is that we completely imploded below a new profile that's going to be out there today. Okay, this is a weekly. We don't have the weekly profiles out yet. eSignal's not giving them to us. But, the thing with PCQ is without that profile on the weekly, the guidance tool on the way up, the dailies were broken around 1681. So I know you're going, well, wow, we know that. What's going to happen in the future? Right now, the big back up the truck on this one is 1606 on PCQ, 1606. And this is going to be, something I'm watching. I'm actually going to keep this on my radar screen. Are you in this right now, Long? Can I ask that? Or are you short? Maybe you can let me know if you want to. Peak D, I'm not saying that the dollar's going to see another high, but a lot of folks were thinking, the dollar had kind of seen its better days, and there was a big consensus out there when it, on that particular kind of hunch. And when people get on a lot of people get on the same side, it usually doesn't work like that. So, put a gun to my head. I think the dollar will go higher. We've seen that happen so many times on so many instruments. Goldman Sachs, everybody getting bullish on crude now. We talked about that indicator. We also talked about Goldman Sachs, who seems to not be making a lot of correct decisions lately, saying, oh, wow, it's time to get long gold. We blew past 47, and I think their targets were like 50 or something like that. So, the technicals, I think we were nibbling in the high 20s and really started seeing a lot of green shoots to feel better about that trade down there. And we looked at, a couple of different indicators. We looked at oil, we looked at Canadian dollar, we looked at the Russian ruble, we looked at the profiles to put all that together early. And I have no idea how an entire research team at a private, or whatever they call themselves these days, Goldman Sachs, couldn't see the writing on the wall until $20 later. It's amazing. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. I still think Tom's putting subliminal audio in those commercials because I just seem to sing them as I walk around during the day. Just kidding. Let's take a look at Apple. Okay, the good news is they're putting all their hopes and dreams on India. We talked about that earlier. But the good news is we're going to have a new profile appear today on Apple. Be aware of that. It's going to happen. That means we've got longer-term inflection points to lean against to whack this thing again. I like how it's not really showing a lot of, wanting to get away from these recent lows here. I'd love to see this thing spin around and head lower. Here's the thing we were kind of looking at before is we can't really get too excited on this particular time frame until we get below 93.81. Now you're going to have a new profile appear on Apple. Let's go back into the scanner and see that this yellow peel back now is going to offer you some new information. So the current landscape, this is going to ratchet down more than likely. I would bet anybody some money on that. And then we're going to have a better chance to hit this thing again. And, again, letting the market come to you. If we get a little bit higher inflection point in the weekly, we can lean against, let this thing drift higher. If you miss the trade, you miss the trade. You don't lose anything. But that's the good news. Gold. You know, and the DAX, I wanted, this thing is just, man, 96.82, I think, is in order on this. Here's the daily. Again, you're seeing kind of lower highs, compression, a little bit more bearish slanted than bullish on this one, too. We're going to take a look really quick at gold again. Starting to get some momentum down a little lower. We talked about this collection area a little bit lower. Didn't like how this thing didn't want to get away from this 1254 area, and it looks like 1240, that general area, might be in order here. So that's, again, letting the market come to you. Not any big time danger on the long term here, so just keep that in mind. Crude, we've already talked about that. Let's take a look at November beans. This is something that, again, getting a weekly indication here, which is great to have some new profile inflection points to look at. Here's the daily. If we get a daily close below 1038, remember this was the kind of bounce area that happened on Thursday. You don't want to see these things come right back down to these inflection points. That usually means it's time to get some people out. So again, this is a sit on the sidelines for a little bit for me. This has been a great regulation of the trade up since that option play that, John from Philadelphia alerted us to on that area down there, that low volatility by the strangle. I think, you've got to be, right now this is kind of a stall situation. This could head much lower. John and I had talked about one day, I think 2 weeks ago, how there's a lot of tug of war things getting ready to happen, possibly, especially in about 4 more weeks with a big report on the grains. But you've got, plantings coming out. You've got weather scares, possibly reports coming out of South America. So there's going to be some volatility in this. And in my mind, there's no reason to stay long if you're letting these dailies regulate the trade up. All right. So, guys, you've been great. Larry's next. Stay tuned to TFNN, and we'll pick it back up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.